Welcome. I've been in the trenches of day trading for over 5 years. One thing that's elevated my edge is understanding how different time frames work to reveal the whole big picture. Think of it like zooming in and out on a map. The higher time frames show the terrain, the major trends and key levels, right? While the lower time frames actually they capture more of a street level action per se. And what I mean by that is you see the volatility, the stop losses, the entries, key entries, points of interest, take profit levels. That's all on a lower time frame, 15 and lower. But when you align these perspectives, you stop reacting and you start anticipating. That's the power of multi-time frame analysis. It's not just about seeing more, but it's about seeing smarter, right? And I'll show you exactly what I mean.
So, if you take a look at this chart, and please forgive me, there I got the people are outside doing the lines. Forgive the noise, but if you take a look at this chart here, we have in red higher time frame, right? We have the higher time frame in red, and in blue we have the lower time frame. So, I'm just gonna break down how this higher time frame and lower time frame ultimately create the bigger picture. So let's get into it. So we'll start down here where we bottom out at this low and we go up and we make a high. All right, cool. Come back down for a pullback, and now we made a new higher high. So instantly you know that on a higher time frame is bullish, right? But on a lower time frame, there will be times when it's bearish. But that's perfectly normal in any type of market scenario, is having a pullback, whether you're bullish coming down for a bearish pullback or bearish coming up for a bullish pullback. It doesn't really matter. So we bottom out and we come up here and we make a high, right? So once we get this high, you want to wait for a pullback. But the thing is, people get stopped out because they think, oh, just because the lower time frame is bearish, right? Because we have a interchange of character right here. This high puts in the new low, but ultimately that's required to have a pullback, right? And like I keep saying, you need a pullback to extend to new higher highs, or vice versa. So, knowing that, we have a interchange of character to the downside, right? So okay, cool. So we're interchanging interchange of character on a lower time frame. So we're bullish, break new high, come back, pull back, high, pull back, make a new high, pull back, higher high. Now we have a lower low, and on the lower time frame, we have a lower low. But the higher time frame, the 4 hour, is still bullish. It just simply needs a pullback, to collect more orders, to collect more liquidity, so that way we can extend higher. So when you see this change of character on an inner time frame, you now know that the higher time frame is coming for a pullback, right? So once you see this here, this interchange of character, a lot of times that gives you the notion that, okay, sometimes there'll be a price level down here, and price will ultimately come down, hit this interest. It'll be like an interest, like a fair value gap, order block, any of those, right? But in theory, it'll come down, smack, get bottomed out, and extend to go take out this higher high. After that, it's a rinse and repeat process, right? So we get bottomed out here on the lower time frame. It's coming for the pullback. All right, we have our pro change of character here, and then now once we get this change of character right here on the pro level, we now know that there's a strong possibility that the market will go and take up this high and take out this high. So we come back down for a pullback, make a new higher high, low, higher high, low, higher high. Now we've realigned with the higher time frame. Just because the lower time frame is bearish doesn't mean that the higher time frame will also be bearish. So we go high, pull back, and we're looking to extend higher, right? And then so what do you know? So after we get this break of structure on a higher time frame, we now know that it's time for a pullback. It's going to be time for a pullback. We're going to pull back. We're going to get in some area of interest right here, and then we're going to look to take price higher. But that's on a higher time frame. On a lower time frame, we'll get something that looks like this. We'll get topped out, pause, and we'll have an interchange of character. Now, just because we have that interchange of character doesn't mean that the higher time frame is bearish. No, we need this pullback in order to extend higher to these levels. So, like, it's rinse and repeat. It'll be a some type of interest, a point in the market that we are interested in getting. You know, so after the pullback, we'll map out our point of interest, and we'll sit. We'll wait for price on a lower time frame, to come down, you know, get a high, make a change of character right here. Once we get this interchange of character, we know that price is coming for a pullback on a higher time frame. Price is on a higher time frame coming back down because on a lower time frame we're bearish. All right, but once we get this market shift again, we get bottomed out. We get this market shift where this low this low right here, it breaks the low it breaks the high that I put in that low. So now we're back bearish, and we're going to make new highs, right? And ultimately, your thinking is, so your thinking is we're high, low, high, low, high. And then from there, you would say, okay, since we just had a break of structure again, we'll probably come back down, getting some interest, and then we'll take that higher. And guys, it's simply a rinse and repeat process. If you can learn this structure, because this is how the market moves. This is how it moves. On a higher time frame, we'll be bullish, but sometimes on a lower time frame, we'll be bearish. But you got to ultimately see the big picture and understand that that's nothing but a pullback, and that is expected in the markets. So just find your points of interest and set your parameters and trust your vision, right? Ultimately though, we'll be making more videos. This is just in theory. I will be going on the charts and showing you how that looks on a chart, but ultimately just, take your time with it. Get to learn these systems and understand that just because on a lower time frame we're bearish, the higher time frame needs a pullback, right? And it's like zooming in and out on a map, right? So I hope you guys learned something, and I'll see you guys in the next video. Ciao.